I did mention that, and I am sympathetic to the people that get super disappointed that blockchain is not going to change the world. I, take some joy in it, but not a lot. Um, but it's also because we got a good answer, and that even though blockchain doesn't solve all these problems, that everything's going to be built on Bitcoin, and a lot of those problems that people see will actually be fixed by a more sound monetary structure. And I mentioned this before, but I want to talk about it in a little bit more detail now, is that Bitcoin's fixed supply, the foundation of having a money that can't be printed, is the 0 to 1 innovation. People tell it's like, don't get lost in the weeds, focus on the problem. The problem is printing money. We are all suffering it. And it is not trivial that the world that anybody can access in any corner of the world, except that we have bad money, but it works. 4 to 6 billion people in the world don't even have bad money. And Bitcoin's a system that can deliver a working form of money that perfects money for the entire world, is global and permissionless. And that Peter Thiel, he doesn't understand Bitcoin. He recently, announced that he sold most of his Bitcoin. But I still will give him the props on this, and hopefully we can help him understand that Peter Thiel kind of gave up on Bitcoin because it didn't, in his words, fulfill the promise of PayPal. Well, what Peter missed was that the fixed supply is the 0 to 1 innovation, and everything that we build on top of Bitcoin is the one-to-end problem of globalization. That those problems are all far more pedestrian than this earth-altering innovation that everyone can have sound money. Everything that's going to be built on Bitcoin is downstream from Bitcoin adoption. And that Bitcoin adoption happens as knowledge distributes. This is a log chart of Bitcoin. Bitcoin going from inception in 2009, when it had no ascribed value, to the first time that it had an ascribed value, I believe in 2010, maybe early 2011, to whatever it is today, 84,000. It's a rounding error. It doesn't matter that it's gone down 20%. Knowledge distributes as a function of time. Knowledge distributes as forms like this, as this being put on the internet for people to understand, people reading books, people listening to podcasts. As people understand Bitcoin, they adopt Bitcoin. There have been a minimum of 2,000 copies of Bitcoin, some that are identical clones of Bitcoin, but with more money. Some with the same money supply and one other different feature. Some entirely different, telling you that they're intended to be gas in a global computer. If it has a token and that token is only valuable in exchange and it has no claim on a productive asset, it's competing with Bitcoin as money. Bitcoin represents 65% of the value. And if you add up all 2,000 of those copycats that are ultimately going to be worth nothing, they all add up to 35%. That is the market finding the signal through the noise. So Bitcoin adoption occurs as knowledge distributes, and knowledge distributes as a function of time, and that everything built on Bitcoin is downstream from that adoption. What do I mean by that? It's that each individual first has to understand why Bitcoin will store value over time before they are willing to buy some Bitcoin and before they're going to be willing to sell their goods and services directly for Bitcoin. Everyone looks at Bitcoin and says, it's too volatile, or, there's going to be 1,000 cryptocurrencies, buy mine. Stability is an emergent property, and it's a property that will emerge as everyone in the world adopts Bitcoin. If you accept for the fact that only 1 in 100 people understand Bitcoin, and that's more realistically not more than 0.5% and more likely 0.1%, that the actual process of stabilization happens as that 1% turns to 2%, turns to 3%, turns to 50%, turns to when Chad has 100% of his endowment in Bitcoin, which is an inevitability. Inevitable. The price is going to go up too much. But that as that happens, there's a process happening in the background. It's that people adopt Bitcoin, that attracts capital, that capital allows infrastructure to be built that makes the Bitcoin network more secure and a greater utility. That actually reinforces the fixed supply, and the cycle continues. And recognize that, when I talk about, and I do it jokingly, that everyone says that, blockchain is going to change the world and we're going to fix blockchain and we're going to put, Watson on the blockchain and then Watson's going to fix it. IBM is storied for all of their failed blockchain projects, but it is a joke, but it's also serious. The blockchain doesn't fix anything. It's one important innovation of Bitcoin amongst many to make it work. But money does touch everything. Money is one side of every value transfer. Everyone in the world needs money, and everyone's going to have Bitcoin, and that money is traded for goods and services. We're not here to stare at our computer screens, at our digital value. That's not the point. The point is to use money to build things of value, real things in the real world, cars, real estate, grocery stores, and we need money to coordinate that activity. Goods and services are all fulfilled by different processes than money is. So we don't need those things to be tied into the same blockchain. And when I talk about Bitcoin, everything being built on Bitcoin, Bitcoin is going to have to be built into every payment system and to every form of commerce. That means every point of sale, every e-commerce website, escrow, bill pay, invoices, how we trade real estate, how we trade oil, how we trade gas. Like that actually has to be built, and that building requires work. We also need it into every form of commerce, not just automobiles, but hospitality, healthcare. I mentioned oil, power businesses, retail, brick and mortar, online, everything. That's going to only happen once the businesses in each of these sectors values Bitcoin. And that's what I mean by all of these things that are going to be built on Bitcoin are downstream from Bitcoin adoption. It doesn't happen in the reverse order. You as a business do not demand Bitcoin payments until you have some reasonable explanation to yourself of why it's going to, at minimum, store value, and it stores value for its fixed supply. The way that this is going to evolve, there's three principal functions of money. There's a pricing unit, a payment currency, and then what people hold in reserve. In the past, it was all dollars. Dollars as the pricing unit, dollars as the payment currency, and dollars in reserve. Today, we're in these second two, which is the dollars the pricing unit and the dollars the payment currency, and people are holding Bitcoin in reserve. What I'm working on and what many people are working on is making Bitcoin a payments rail. The way that will work, if you're confounded about how people could accept Bitcoin as payment, you still price in dollars, and at the time of payment, we do a quick little conversion to say this is how much Bitcoin it is, and you accept Bitcoin as the payment currency, and then you just save Bitcoin. Where we're going in the future, Bitcoin being perfectly stable, everything being priced in Bitcoin, everyone trading Bitcoin for real goods and services, Bitcoin will become the pricing unit, it will be the payment currency, and it will also be the reserve asset, and we will move down this path over time. But importantly, not all of this is going to happen overnight. Rome wasn't built in a day, and neither is Bitcoin. Bitcoin's fixed supply and its stable protocol. And Drew used to tell the story about how he had this Bitcoin node running from 5 or 6 years ago, and he didn't even know it was still there. He turned it on, and it was still validating transactions. Bitcoin is incredibly stable as a protocol. It's intentionally simplified. That and its fixed supply is the strong foundation. On the left side here is the weak foundation. This is crypto and this is blockchain. People building apps on quicksand, functionally no foundation. It doesn't matter how good your ability to interact with application is if you don't have good money. What Bitcoin is building is this rock solid ironclad foundation and this gradual buildup. And that in time, Bitcoin will be one side of every value transfer. But as Drew was explaining there, and he'll get into more in this last part, is that it doesn't make sense to have every receipt or every record of all people for all time stored by everyone in the world. That Bitcoin will scale in layers, and it is scaling in layers, and some of that commerce will happen directly on the main Bitcoin blockchain, but more likely and over time, we will have ways to scale those payments, and they already exist today, and they're being perfected, but they actually have to be attached to the things that really matter, the things that we trade for, the real goods and services. So with that, I will transfer it over back to Drew for the last time on what it means to scale in layers.
So I feel sometimes when I talk about these issues, people think I'm an altcoiner, and I'd like to maintain that I'm not. I am just sometimes interested in the same goals that altcoiners have. I see value in bringing some of the power of decentralization to other kinds of things beyond just directly money, right? I see value in disrupting marketplaces for telecommunication and computing and attention and advertising and many other kinds of things. Maybe not so many physical things because we're talking about a digital currency and digital disruption and digital networks. I think a lot of physical things still require physical networks in order to exchange fairly. Bitcoin will still be part of those exchanges, but I want to focus on those more digital things. And at least in that context, I really want to push back against this phrase that I think gets said often as a shortcut or shorthand for something that is much more complicated and nuanced that we don't like saying, right? So we say, hey, wouldn't it be cool if we could take all these services and put them on chain? That sentence with various variations on it has been repeated 1,000 times over the last decade in investor pitch rooms, and it's the origin story of so many altcoins. Is what if we could just put X on the blockchain? I think again, this is a cargo cult way of thinking. This is trying to say, well, because blockchains cause decentralization, if we can do this inside of a blockchain, it will be done in a decentralized way. And I think I've tried to dispel that attitude in like prior sections that we've gone through today, but I want to now embrace it and sort of translate it for you. Like, what is the most generous way we can interpret the ask to put something on chain? Because I don't think you actually mean putting it on chain. What I think you mean is, I wish there were a giant market globally that I could participate in which I could post asks and bids, and I could get matched with a service provider who gives me exactly the product or service I was looking for. And I get the lowest possible price that the market can bear, and I have no counterparty risk, and I'm not afraid of counterfeits, and it's all good. Like, this is what I think people get from Bitcoin. This is how it feels to interact with Bitcoin. You are trading anonymously but securely with people around the world in an incredibly efficient, ruthlessly efficient marketplace, and you're getting exactly what you wanted at the lowest possible price. If we could bring this kind of experience to other marketplaces, we would be better off. But that does not require a blockchain. All it requires is a market that trades Bitcoin. And indeed, that is already happening. We have begun that journey, right? Parker's talked about payments, but he didn't mention the phrase, so I'll mention it now. The Lightning Network. The Lightning Network is a project. It is not a blockchain. It is not a new currency. It is a new set of markets. It is a way to incentivize Bitcoin owners to create payment channels, to park liquidity in those channels, and to route other people's payments over this new network in exchange for Bitcoin. There is an interaction with Bitcoin's blockchain, but this is not happening inside the blockchain. This is a market settling through Bitcoin. And I want to point out that the Lightning Network is still extremely early, because of course it is, because Bitcoin itself is incredibly early. Right? Parker has repeated for us several times that the average person just doesn't understand Bitcoin. The number of people that understand it is tiny. The number of people that own it, while large in some absolute sense, of maybe 100 million people worldwide own some amount of Bitcoin in a meaningful way, that's still a tiny number of people, like in a real sense. So until we get to the place where adoption has grown to the point where people demand to be able to use Bitcoin as a payment currency. Today, they're really not asking for that as much as they will in the future. Until we get to that point, we shouldn't really expect to see solutions like this displace Visa, but they will, right? Because Bitcoin is always going to be one side of every value transfer. And eventually, we're going to need to do that faster than we can do it on the blockchain. And we're going to need systems like this, markets that we've designed that incentivize the behavior we need through offering Bitcoin to service providers. I want to make one comment about Tor here. So the Lightning Network, in order to preserve privacy, uses a payment model, which is called onion routing. It's the same idea that was in the actual Tor network that I mentioned several slides ago at the early part of this talk. It's interesting that Tor, as a private way to browse the internet, has been around since 2002, and it has never crossed 10,000 nodes worldwide. The Lightning Network has been around since 2018, and it has already surpassed Tor. And why is that? You get paid to run Lightning nodes. You don't get paid to run Tor nodes. If you run a Tor node, you run risk. You're going to have unsavory traffic routing through your Tor node trying to access the dark web. And you don't get paid anything for that. So why do that? Well, as a result, the Tor network is mostly believed to be run by intelligence agencies. And so the point of having private browsing has now been defeated because the lack of an opportunity to make profit in providing that service anonymously to other people in the marketplace. The Lightning Network, though conceived not as a private way to browse the internet, but conceived as a private payments network for Bitcoin, is a larger onion routed network than Tor itself. And that's largely driven by people's excitement to earn Bitcoin in order to be able to make payments for other people on their behalf. So where does this grow? What does this turn into? People will eventually start paying for data to be transmitted through that extremely private onion routed network, exactly the way that the dark web works. And I think what's so fascinating about this is it gives us a methodology for how we can build layers of infrastructure, all motivated by markets which are settling in Bitcoin. Because after all, if we can convince people to sell us computations in exchange for Bitcoin so that we can keep the blockchain secure, if we can convince people to park liquidity and to enable payments in exchange for Bitcoin, so we can disrupt, respectively, the Fed, Visa, can we also incentivize people to sell us bandwidth so that we can transfer data in this cool new network that we built, thereby displacing Sprint, AT&T, Comcast? Is it possible that we can incentivize people to store, retrieve, transfer data, run algorithms for us, displacing Amazon Web Services? Yeah, of course this is possible. We're really just asking, will people accept Bitcoin for these things one day? Of course they will. It's not quite as simple as that because the way they accept it will change the way in which those payment networks work. Bitcoin will be meaningfully better in a lot of ways than the pre-existing systems that it's disrupting, but this is not a magical process. I'd also point out that this is not a roadmap. I don't know when these things are going to happen, and I don't know what they're going to look like 100% because I'm not in charge, right? If this were an Ethereum conference, an Ethereum talk, this would be a roadmap. We would all be committing to some crazy name that we would assign to some future date when we will hard fork this entire network and change it to do exactly what we need it to do so that it can stay on the roadmap. But none of us have that power because Bitcoin is decentralized, right? So if this is anything, right, what this is recognizing what the future growth of this city that we are all building together looks and feels like, right? We are settlers in the middle of the valley floor. We just got there. It's a beautiful place to build a small town. And I'm the guy at the edge of town. I'm looking at the mountains. I'm saying one day they're going to build houses up there, right? So that's what I see. And just to summarize everything we've said today, so it really lands with you guys, sticks in your ribs and your bones, right? What have we said? Bitcoin is the best money in history because it provides incredibly strong protections to its users. First and foremost, an inability to change the fixed supply and dilute your savings and your wealth through inflation. That's why it's the best money in history. And that value proposition is defended through Bitcoin's decentralization. Right? The fact that you can't control the network because you can't convince everybody is what prevents the network from being captured or controlled in these ways. That is ultimately due to strong markets in which people are being paid to provide the services that cause Bitcoin to run. It's not due to blockchains. And indeed, if we want to generalize this value proposition to other contexts, other market arenas, it is not the blockchain we should be generalizing, but the notion of strong markets which settle through Bitcoin, which after all is completely natural, as Parker has reminded us, right? Bitcoin money, or money converges to one. Bitcoin is the best money. Bitcoin will therefore be one side of every value transfer in the world and will therefore be the currency that all these future markets are settled in. Now, to close, before I hand it back to Parker to really send us home, two simple ideas. Number one, if Bitcoin does become the global reserve currency, but the internet is still run by centralized telecom providers, and your government still spies on you through those means. And so many of the other mechanisms that we rely upon are completely provided by one or two or three giant international companies that are often in the process of acquiring one another so they can even be fewer of them. If this is the world in which Bitcoin is the global reserve, have we won? That feels like a partial victory to me. I'd prefer to live in a world where we've been able to bootstrap these value propositions to many other markets because ultimately I believe, and we are seeing this with Bitcoin, like decentralized systems that are market driven, in which we are voluntarily providing each other services and consuming them based on price discovery and mutual respect and freedom, are ultimately more robust, more efficient, more transparent, they're more fair, they're morally superior, and we should seek to build them everywhere we can. And all we have to do to get started is buy some Bitcoin. All right, Parker, let me hand it back to you. Take us home.
All right, so my wrap is just Bitcoin, not blockchain. It's really Bitcoin and its blockchain. The money and the transactional records are both important. Don't get lost in the weeds. It's that this fixed supply is earth altering and it's non trivial. Do not skip past it. The fact that we have a system that can deliver sound money, money that can't be printed to the entire world. Imagine 8 billion people, one common ledger, not one computer, but able to arrive at the same state of ownership without a central third party. That is by its nature non trivial, and that there is no blockchain without Bitcoin and vice versa. Bitcoin doesn't work without its blockchain. And that what Drew was saying, I also believe that Bitcoin will drive decentralization, it will drive innovation, and it will drive economic stability. First, there were two. And when you think about this, there were only two people. First, there was one, and then there were two. Satoshi, this is a statue of Satoshi or an idea of him in Lugano, Switzerland. And Hal Finney. Hal Finney was the second. Bitcoin was hyper centralized at the beginning. Now there are hundreds of thousands, millions. Soon there will be everyone in the world. The problem that it is solving is money printing. If you have a world with a centralized money supply, it is causing everything, every industry to centralize around the money supply. Whoever can be closest to the money supply, get the cheapest manipulated cost of capital wins in that system. Bitcoin is emanating for the center. That system is collapsing on itself because of centralization. What does decentralization mean? Bitcoin, as more people adopt it, the money gets distributed to more people. You can only spend the Bitcoin once. It's a more fair system. It's also a more stable system because it incentivizes savings. people can't debase your money. As people have more savings, it's more people contributing to ideas, it's more companies competing, and that ultimately means greater prosperity and greater wealth. And we're not here just for the money, but if you fix the money, then everything is downstream from that, and you have an actual viable chance to fix everything else that's broken. But if you don't fix the money first, you never have a chance. So, with that, we will open it up for questions.